Good afternoon. Welcome to the TheoTrade afternoon video for April 4th, 2023. I'm Blake Young, and today we're going to be talking about job openings jolts the markets. We're going to talk about specifically a job opening labor turnover survey in just a second and tie that into employment. But I want to highlight one of the things that we're seeing in the ES first. So the ES has had a lovely run up. We've seen it go from 3,900 up to 4,150, climbing most of those days. About 60% of the days are up. The down days have been big. The down days have been widening patterns. That widening pattern tells you that there's still a lot of volatility in the growth. And you'll see that that's what happened here and again happened today. The difference in where it happened today is it ties back to the 6-month highs. It ties back to this area where we've reversed before. Failed to break out, failed to break out, failed to break out, and accelerated on the downside as far as price action is concerned. Now I'm using the June contract specifically rather than the regular month so that it gets rid of the lines and gives you a clean chart. But this is a potential barrier, a supply area, a seller's area, a top in this market. And that's what we're seeing. And so today's candle, even though it's not massive, it's not as big as some of these bearish moves that happened back here. It is a larger than normal day, a widening pattern, and occurring on the job openings labor turnover survey. Today appears to be reacting to a report that normally wouldn't reverse the market. But it appears that we're also tying in all the previous information announcements that we've heard in the past. So to take a closer look at this, let's take a look at the job opening labor turnover survey over the last number of years. To do that, we're looking at the JOLTS here, and it's going back all this time period. Let's zoom in tight right on this last little move. And to note that today's job opening labor turnover survey is showing that we're at 9.9. That may mean absolutely nothing to you. You say 9.9 what? Well, this is 9.9 million job openings. That still may mean nothing to you. This means that the employers have posted 9.9 million jobs. The problem is this is the lowest level that we've had since 2021. In fact, we have to go to July of 2021 when all that money was being pushed out, all that employee retention credit was being given to push this higher. In fact, these levels were a employee market, meaning the employee got to call the shots. They say, hey, look, if there are 10 million, 11 million, 11.5 million job postings, and there are only 5 million people unemployed, 4 million people unemployed, that means there's 2.5 jobs available for anyone that doesn't have a job that wants one. And that's across the board. And so huge number of job openings. Well, this decline, these lower highs and lower lows, not only is it coming in at the lowest level in 2 years, but remember, this is on the tail of multiple large companies announcing that they will have layoffs this year. And so if they're going to have layoffs this year, at what point, at what impact are we going to start seeing those layoffs occur? Well, the JOLTS, job openings labor turnover survey, everybody focuses on the job openings. Great, we have 9.9 million job openings. How many people are unemployed? The second question, if we go right to BLS.gov and we look at the actual report and read what's in here, we can go in and say not only how many job openings are there, which is a major pullback, a 2-year pullback, but also we can say of the people that have had separations. So this is the labor turnover. How many people did we lay off? How many people quit? How many were discharged or other separation? So quits, as you can see, are basically people quitting. They're voluntarily leaving, looking for another job. And so when you look at that big number of layoffs or separations and quits combined, what we're seeing is that this was primarily 4 million quits. That means we're still not accounting for the layoffs and firings and downsizing, discharges, or other separations. This is still people just quitting, thinking they can get a better job or getting a better job. This is not adjusting to the 1.5 million. That's actually down from the previous month. So we still aren't accounting for the next wave of layoffs. But the data still tells us we have less job openings, which is a cooling market. It tells us that people are still quitting, and that's the biggest number of turnovers. But we're offering less number of jobs. And from the peak, again, going back to that peak, we've gone from 11.5 to 9.9. So we'll just say 11.5 to 10. We've dropped 10% of the job availability, at least. And we're looking at that 10, 12, 13% decline in job available and thinking, okay, if we were not growing the employment and now we have less job available, what will that mean next? Let's go back to the Bureau of Labor and Statistics, again, BLS.gov, and look at the employment data. This is the employment data over the last couple of months. And so I'm going to zoom in over here, and we're going to focus on three different things: civilian labor force, employment level, and unemployment level. A lot of people get confused when they hear about unemployment. Unemployment is not the difference between the labor force and the people that have jobs. The difference between the labor force and the people that have jobs is a very important number, but that's not telling us what we can expect as far as the number of unemployed. Unemployed are people that are on unemployment benefits. So if we take the total civilian labor force, it has been growing. We've actually seen a stronger participation rate. We've seen more people trying to get jobs, more people trying to get jobs, more people trying to get jobs. That's likely due to inflation. We went from a low point just a couple of years ago in 2020 from 156 million people participating in the workforce in April. That was right at the end of the lockdowns, or the beginning of the lockdowns. We've gone from 156 million to the highest participation rate we've seen in over a decade. Why would people be going into the workforce? Did we really see an inflow of 10 million immigrants into the United States getting into the workforce? And the answer is no. We can actually track that data as well. This is people getting jobs to pay for things. The inflation, we have increased the workforce by 6 million in this move in a matter of 2.5 years. That is nearly 4% increase of total people in the labor force. Now, if we look at the employment level during that same time frame, just kind of tying those things together, we went from a total employed, people that have jobs, not the same thing as people that are unemployed, people that have jobs, from 133 up to 160. Now, what is that telling us? So 133,258,000 to 160,355,000. So not only has just the total number of people that are available to work, the total participation rate, the total group of people saying, I am willing to work, we've increased from the number of people with jobs from 133 million up to 160 million. So of those people, this is one of the strongest. And in fact, if you can look at this chart, it is the strongest number of employed people, number of people with jobs that we've had in a decade. That means we are very employed. If we look at the 133 to 160, we're talking about 27 million people. More people have jobs than the low point in 2020. So in those few years, we went from 133. By the end of that first year, we'd increased to 151, recovering most of the losses. And now we're at the highest level we've seen in a decade. So 160 million people have jobs. Now, if we look at the unemployment data down here, you can see how many people are collecting unemployment benefits. The unemployment benefits really haven't moved nearly as much in the last little while, but from the peak, again, using the same time frame, we had 230 million people. If we look at the unemployment data, we had 23 million people at the worst point. And right now we have 5.9 people on unemployment. This is ticking up a little bit. So what is that really telling us? We're getting more people unemployed while we're getting more and more people employed. How does that work? Because this is the people on unemployment benefits. We can be getting new jobs while more people are being laid off and qualifying for unemployment benefits. So there's about 250,000 more people that are getting unemployment benefits, which means they've been laid off already, while we also see that we're increasing the total number of people with jobs. This is a moment where we're seeing people still scrambling to keep a job. If we were to take this a step further, we could actually look at the number of people with multiple jobs, and we could determine that this highest number of participation, highest number of employed, and a rising unemployment level is an indication that we are trying to keep jobs, we're trying to stay fully employed, and we're trying to keep things moving. So the job opening labor turnover survey that shows a slide in what is available, well, the difference here is now, well, there's 5.9 people receiving unemployment benefits that may want those 9.9 million jobs. We're not at 2.5 times anymore. In fact, if we look at the participation rate and say there's 166,251,000 people wanting to participate in the job market, and there's 160 million people with jobs, that difference is a better indication of people that are trying to be employed. So we're talking about roughly 6 million people that want jobs, a little bit higher than those that are unemployed, and about 9 million jobs available, which is much different than when we were in the 5 million of people that wanted jobs and 11 to 12 million jobs available. So we had 2.5 times. So this pullback, this slide, not only is it a significant pullback from the highs, it is also the trajectory saying where can we and could we and should we end up seeing this number go. If we zoom back out, the only reason why it's up here is because the huge amounts, the literal trillions and trillions of dollars that were spent to create jobs and to retain employees that caused this. The peak levels that we were at, that were peak healthy, quote unquote, healthy economy, were about 7 million. If we see back at the recession that went into 2007, 2008, you can see that we were about 4 million job openings. And again, very high employment level, very low unemployment level back here in 2006, 2007. So we are still looking at being nearly double that, even if we pull back into this area to 6 million, 7 million job openings. And I would say that the 6 million is probably more likely. And so falling from 9 to 6 or 7 million would mean that yes, there's a job open for everybody that wants a job, but realistically, we have not seen the layoffs occur yet. In fact, that had a dip or a tick down in the total number of layoffs this last month. A drop from 9.9, which we're already creating lower highs and lower lows, a drop down to 7.5 or even more possible down below 5 would mean there's less jobs available than people that want jobs, and that is a rough market. That is one that employees don't have jobs. So are we seeing this play out? Are we seeing this indication that we are headed that direction? If we are, we should see a decrease in demand. We should see less purchases. We should see a slowdown. Let's go back to the charts. And if you were with me earlier today in the main room, you know that I love looking at copper as an indication of growth because copper is used for home building, used for electronics, and used for cars. Those are the top 3 uses according to the U.S. Geological Survey. So copper prices falling down like this, copper prices reversing from 410 to 397, may not seem like very much. But when we're looking at that move down through here, this is creating lower highs and lower lows and continue the downtrend. And a falling copper price means falling demand. If we're going to see less demand, where are we going to see it first? Probably in the things that are unnecessary. Probably. You know, you never can tell. If we were to go into today's heat map and say, what are we seeing in this heat map? This is today's action, today's behavior. Well, we have all the major sectors here. And if I were really thinking that this is going to be a slowdown in demand, that's what we're seeing because of jobs, and we haven't even seen the layoffs really take hold yet, I would look at the consumer discretionary. And under consumer discretionary, there's a couple of things that I would watch. I would watch a slowdown in automobiles, absolutely, and I'd look for a slowdown in leisure. So some of the areas that I'd be looking for is weakness in Las Vegas Sands, which would also impact and hit China and the Chinese market. A lot of Chinese holdings in there. But Marriott, Hilton, Tesla. Now you'll notice that Mickey D's is in here in the hotels and leisure, but remember this is also a substitute one that we talked about in the past, substitute to the restaurants. So maybe shorting DRI, I talked about this yesterday, shorting DRI, Darden Restaurants, and buying McDonald's as a pairs trade. But some of these others that we might look for, we might look at durable goods down, we might look at auto components down, we might look at booking as an opportunity down. So taking a look at some of these specific charts, let's start with booking. Are we going to be going on vacation if we're worried about our job? If we're seeing layoffs in our company, are we going to do that? Probably not. Well, we can see a similar widening candle, equal highs roughly, and then lower lows, a similar widening candle in something like booking. Could there be an opportunity to sell call verticals here? I would think so. Go to Las Vegas Sands. And remember, Las Vegas Sands is not just a casino. It is a leisure company and again, Chinese holdings. You can see that we've definitely put in a top here that we're struggling to move any higher. And this gap down, close down, gap up, close down is a pretty strong indication of reversal. And we filled the gap. So anything below this close could continue down to 52, if not lower. So I'm looking for a 10% drop in companies like Las Vegas Sands. One of the other leisure groups that I've been watching is Target Hospitality. And you can see we got an early warning on this. Lower highs, lower lows, broke through clear support, and probably going to drift down into this $10.66. Now, this is a small company, a very sub $15 stock. But this is a good indication in my mind as far as leisure and travel and just looking at something that could continue to fade. If we're looking at automobiles, we already saw the weakness in Tesla, even though they're announcing their cheaper $20,000 city car. But if we're to look at the other motor companies, GM, major lower highs, lower lows, lower highs, lower lows, probably coming back to 33, looking for a 10% drop in GM. Ford, who is kind of aligned recently with China as far as production, could see a reversal here as well. And I'm watching to see whether that China deal plays out and helps them out, or if they fall back down to 11. Now, 1264 to 11 doesn't sound like much, but again, it's over 10%. Taking a look a little bit closer into the specialty retail might be something to take into consideration. And we might look at CarMax and combine the two. We could say, let's take a look at CarMax and combine specialty retail with cars. And you can see, yet again, lower highs, lower lows, lower closes, and just a retest of the low should be at least a 10% drop. So there are a lot of stocks that are rolling over already in a downtrend that will be impacted from the consumer discretionary, the cyclical purchases of the markets, if this job opening labor turnover survey is an indication that we have reached the peak of the employment market. So as we watch ADP tomorrow, as we watch non-farm payroll on Friday, understand that not only are we looking for indication that that is the case, that we are seeing employment slow down, we are looking for lower highs and lower lows, as it were, as we watch the BLS, Bureau of Labor and Statistics, show us whether we're seeing a tick up in unemployment and a tick down in unemployment this month. If we see that tick down, we're only confirming that JOLTS will not have enough job openings for the people that are being laid off. So watch for that. It's going to be something that we should be able to see by the end of the week, and we'll continue to see this feed into the markets. That's going to do it for me today. Again, watch for ADP tomorrow. That's going to be significant. Otherwise, we'll talk next week, and have a fantastic